Good morning from London. I'm Anna Edwards alongside Guy Johnson. We're an hour away from the opening trade. Here's what you need to know. Donald Trump pushes for a bilateral meeting between Putin and Zelensky, with the US and European allies now promising security guarantees for Kyiv. We will have the latest on Ukraine. Indian Prime Minister Narendra Modi hails Vladimir Putin as a friend, as his government also moves to bolster relations with China. And a surprise from SoftBank, the Japanese investor has agreed to make a $2 billion investment in the US chipmaker Intel.
Good morning, Anna. Welcome back. Let's talk about these markets and figure out where we are. Euro Stoxx 50 futures up a little bit. S&P futures down a little bit. We're in the middle of August, folks. Come on. Let's not try and pin narratives to what we're seeing on the screen behind us. I think we're kind of just marking time, waiting to see what the next catalyst looks like, and there are plenty coming. New York crude, though, I am prepared to talk about. I think this is an interesting story. We are softening up a little bit. I think you can draw a line between what is happening with crude and what is happening with Ukraine and the geopolitics. Europe, in theory, would be a beneficiary of peace. We're not seeing much movement in euro-dollar this morning. I do wonder whether we are pricing out a little bit of the dovishness when it comes to Powell Friday, and whether that actually just keeps euro-dollar fairly kind of balanced at the moment. We're barely budging on that. This is not an exciting board this morning, but there's plenty of catalysts still to come, and the countdown to the opening trade starts right now.
The war is going to end. When it ends, I can't tell you, but the war is going to end, and this gentleman wants it to end, and Vladimir Putin wants it to end. I think the whole world is tired of it, and we're going to get it ended.
The biggest news, as far as I can tell, is that Zelensky was wearing a suit, which seems to have caused an uproar in D.C. And many column inches to be written about it. Is that a significant development? Maybe there's a signal there that peace is coming. There was certainly a lot of charm in the White House yesterday on both sides, and there was money as well. Zelensky brought money, a big order for U.S. defense companies. Yeah,
absolutely. There was a lot of charm. There was a better mood in the room, which, let's face it, it couldn't have been much worse than February. It was better. Maybe there's message in the suit, and maybe that helped at the margin. There was a lot of focus on security, though, and this is something that European leaders have picked up on. And so let's get the European perspective on this. Let's go to Oliver Crook, who's in Brussels, who's been watching these developments for us overnight, Ollie. And a lot of the European leaders going with the intention of trying to secure something on security guarantees from the United States or security involvement from the US, and getting some of that.
Yeah, I think they would be very reassured from some of the things that Donald Trump said in the conversations. Again, I think he reiterated in a way that was fairly strong the U.S. commitment to be involved in the security architecture after a peace deal in Ukraine. And remember, this is something that until a couple of days ago, the United States has never really explicitly stated in those kinds of terms. So again, to hear that in person from the President of the United States will be a big victory for European leaders. The question now is, what do these Article 5 style guarantees actually look like? Does it involve the United States saying very explicitly that if there is a further incursion on Ukrainian sovereignty by the Russians at a later point after a peace deal, that the U.S. would be directly involved militarily? Does it mean, and to what degree does it mean, European troops from different nations stationed in Ukraine as sort of peace-observing, peacekeeping operations? These are all still very much open questions after the meeting. It's clear that what the European leaders wanted was more clarity on the security guarantees. It is clear that an architecture is being worked on. We still had a pushing of a ceasefire by Macron and Merz. They were really trying to push that idea forward in the preliminary discussions that they gave the statements before the meeting began in the East Room of the White House. Trump sort of pushed back on that. He said a ceasefire would be nice, but really it's not clearly a priority of his. The other thing that they really want to do is talk about the sort of territorial situation. I think they'll be reassured by the fact that Donald Trump is not trying to impose verbally in any sort of explicit way those kinds of things on the Ukrainians. But of course, the big prize after all of this will be the trilateral meeting between Putin, between Trump, between Zelensky. That is what all the European leaders were pushing for. It seems that after that, Trump spoke to Putin after those meetings. He said that he's organizing a bilateral between Zelensky and Putin that will hopefully, after that, be organized by that trilateral meeting between the three leaders in order to try to make some meaningful progress. For the Europeans now, the task at hand as they return home is trying to sell some of this to their domestic audience. Remember, this is not a done deal. It is not done that the European nations will sign on to stationing troops, for example, in Ukraine after a sort of peace deal. So all of these things are still open questions, but it's clear that progress is being made on some kind of architecture for security.
Yeah, and that does seem like the big takeaway, doesn't it, from these developments overnight European time. Oliver, thank you very much. Bloomberg's Oliver Crick with the latest on what European leaders take away from this. And there was a substantial conversation and a substantial a change of tone, really, from the United States when it comes to what they're prepared to do, although we don't know what the details look like. And they talk about it as being a coordinating role for the US.
It feels like we're back to where we were pre-Putin in terms of where Trump's kind of sense of direction is right now. And I think the Europeans have done quite a good job in getting him back to there. Are we going to see bilateral meetings between Putin and Zelensky? I don't know. Are we going to see a trilateral meeting? I don't know. But what is clear is that Europe, to Wally's point, is going to have to spend some money here. And can Europe afford this? Can Europe sell this to its domestic audience? Is there something that we'll have to give in terms of spending elsewhere if Europe is going to be doing this and putting boots on the ground and kits on the ground and money on the ground? So all of that, I think, remains an open question.
Yeah, absolutely. Is this more money versus what we previously already knew about 5% of GDP at those NATO summits? So questions on territory, questions on whether these meetings take place, this bilateral being proposed, then a trilateral. And to your point, Guy, we've had no confirmation from the Russia side that they agree to go ahead with any of those meetings. Talking about Russia takes us on to India. China and India, actually.
This is really interesting. So is this the fallout that ultimately we are going to see from A, tariffs, B, Ukraine, and kind of see the Trump policy towards China and India? And you do wonder whether a new group is forming, and it certainly feels that at the moment. We've seen, obviously, inklings of this in the past with sort of the BRICS summits and all kinds of other summits that have taken place. But this feels firmer than that. India and China together, talking about being friends, and you've got this Wang Yi meeting that's taking place currently with the Chinese in India. You've got Modi describing Putin as a friend. You've got a triangle here that is forming that I think the United States is going to take very seriously going forward from here. But in some ways, the United States has created this connection between these countries. And you wonder ultimately where this one's going to go. And there are implications of this for Africa. What happens in Africa, I think, is going to be hugely significant as a result of this. India, Pakistan, I think, gets affected by this as well. There's lots of different reads on this. But what is clear is that you are getting a big sphere of influence being created here, which could have a very long-term effect on geopolitics.
Yes. And so is this a reshaping of geopolitics on the back of President Trump's trade policies, or that and other policies coming out of the White House right now? And just to reiterate what we've seen with regards to India over the last couple of weeks, a big evolution there, of course, which you'll be well aware of, the fact that these tariffs on India have been doubled. And so no surprise, perhaps, that Modi is pushing back against that and finding friends elsewhere, and finding friends in Russia and finding friends in China, which and the Chinese relationship has been strained over the last 5 years.
Russia provides the energy. Thank you very much indeed. We'll take your cheap oil.
Much to Peter Navarro's upset, anger.
Of course. India's a huge market. China's a huge market. Obviously, it's going to be interesting to see how those relationships work. Are they, in the past, they've been competitors. Do they feel like competitors now? I don't know. If you've got two massive markets that potentially could have huge overlap, and it'll be economically fascinating to watch how that could evolve. Yeah. And that has implications for Australia, AUKUS, all kinds of other geopolitical fallout from that. So
global geopolitics being reshaped then under a second Trump administration. We're also seeing a new version of capitalism in the United States, where the government is incredibly involved in certain sectors, and chips is really one of those. So let's talk about Intel. Let's talk about some of the news flow we've had there. There are two strands to this story, and the first of them is that SoftBank is buying a $2 billion stake in Intel. They're increasing their footprint. This comes on the back of a Japanese trade deal, which the Japanese are still trying to get to, to the crossing of the T's and the dotting of the I's on. But that's sort of the background context. It's a bit of a vote of confidence in Intel, which is variously described as storied or beleaguered, depending on whose copy you read this morning. But a vote of confidence in the new CEO, then perhaps, who is Lip Bhutan, who's had a really busy time. So developing that relationship with Masayoshi-san to secure this. But he's also been busily talking to the White House, and he's managed to convince, according to our reporting, the government to consider taking a 10% stake in Intel.
Does this take breakup of Intel off the table? I think is one key question. That has been talked about. How do you derive value from Intel? One of the ways that you could do that is a sum of the parts calculation and break it up. Maybe that would be something that would be harder to do with a government holding. We'll wait and watch. And how does it compete? How does it scale up with a government sitting on its back? Because governments are brilliant at running companies. There's a long history of governments being brilliant at running companies. To compete with firms like TSMC. There's a note out from Richard Windsor at Radio Free Mobile, which is really interesting this morning. This is a gift to its competitors, which I think will be able to continue taking market share without having to try very hard. There remains no price, quote, at which I would want to take a position in Intel, says Richard Windsor.
OK, not sitting on a fence there.
No.
It's interesting that actually what unites these stories, a couple of the stories we've been talking about this morning, in the Intel context, our reporting suggests that the government is going to try and convert some of the money it's giving in the CHIPS Act into an equity stake. And just in this, not same, but similar vibe coming through, and what the US is trying to do with the relationship with Ukraine. They're sending, it's less about the money, it's more about Ukraine placing orders for weaponry, as you.
I thought it was about rare earths. Wasn't that the original deal, that they were going to talk about rare earths? There was a lot of rare earths going on for a while. Let's talk about what's coming up on the show. Yeah,
absolutely. We've got a host of guests lined up to talk about some of these stories this morning. Rufaro Chiriseri is going to be with us, fixed income head of the British Isles at RBC Wealth Management, although able to talk much more expansively in a geographical sense. Livia Paggi joins us, Managing Director for Strategy and Risk Advisory at JS Health. So we'll be talking there about what we take away from this Ukraine conversation on security, on territory. Eryk Wytenus joins us, EMEA Head of Investment Strategy at JPMorgan Private Bank. What does the AI story look like as we put the earnings story to behind us to some degree? How do we look forward to the rest of the year? And José Albares will be with us, the Spanish Foreign Affairs Minister. Spain not represented at the White House yesterday. Represented by Ursula von der Leyen, if you think about it, all of Europe was. But they were not there, but clearly have something to say when it comes to Ukraine and have been involved in other initiatives.
Yeah, there's a few challenges going on in Spain right now.
And spending, yes, there are, and spending on defence, perhaps there, a little bit of pushback we saw at that NATO meeting.
Would Spain be prepared to put boots on the ground? Because that's certainly the movement that we're seeing. How unified is Europe going to be on that front? What else do you need to know? What is it, this Tuesday morning? Hamas says it has agreed to a truce deal proposed by Qatar and Egypt to pause fighting with Israel in Gaza. A diplomat has told Bloomberg the proposal would see Hamas release half of the hostages it still holds in exchange for the release of Palestinian prisoners and a partial withdrawal of Israeli troops. It is not clear whether Israel has received the proposal or whether it would agree to the terms. Bloomberg understands that Shein is considering moving its base back to China to help its hopes for a Hong Kong IPO. The fast fashion retailer is currently domiciled in Singapore, but sources say it has consulted lawyers about setting up a parent company in Beijing in the hope that it would sway authorities in China to sign off on its listing in Hong Kong. The company is running out of places to float after failing to secure regulatory approval in London and in New York. And full-year underlying profit of BHP has fallen by more than a quarter to its lowest level since the pandemic. The results from the world's largest miner were broadly in line with expectations and came as prices of BHP's key earners, iron ore and coking coal, came under pressure from softer Chinese demand.
Everybody's chasing higher standards of living. To feed that growth, to feed those higher standards of living, the reality is the world's going to need more of the commodities that BHP produces. There's more steel needed to build cities, more copper needed not only to electrify the world, but for data centers, so for AI. And so we've tried to orient the BHP portfolio towards those commodities that the world's going to need more of.
Mike Henry there speaking more positively then about China. Coming up on the programme, S&P has reaffirmed its AA+ long-term rating for the United States, saying tariff revenues will help reduce the fiscal hit of President Trump's recent tax and spending bill. Plus, we will watch European defence stocks at the open on the back of that meeting with Trump and Zelensky. What is at stake for that sector in these conversations? Up next, UK 30-year inflation-linked yields hit the highest since 1998. We'll dive deeper into the moves. If you have any questions for our guests, if you want to get involved in any of these conversations around this desk, IB plus BBTV Go this morning and every morning. That is the function to use to get in touch with the team. This is Bloomberg.
This week, Bloomberg is live at the Jackson Hole Economic Symposium, bringing you news and interviews with Fed leaders and other economic experts. Tune in for continuing coverage leading up to a special episode of Surveillance, Friday at 9 a.m.
42 minutes to the opening trade here in Europe. What is going on in fixed income? There's a lot of moving parts over the last couple of days that I think are worth folding in. S&P has affirmed its AA+ rating for the United States, saying that tariff revenue apparently will partially offset the weaker fiscal revenues from Donald Trump's so-called big, beautiful bill. How does it all work? How does it all fit together? Valerie's here to explain.
Well, S&P Global calling the tariff revenue meaningful in their report out overnight, where they affirmed that AA rating and said the outlook was stable for the U.S. economy. They also, in some way, revised a better track for the U.S. deficit over the next 3 to 4 years. And all this on the back of tariff revenue. Remember, for the month of July, they came in quite positive. $28 billion was collected by the U.S. Treasury. And we even heard from Treasury Secretary Scott Bessent speaking to Bloomberg last week, saying he expects tariff revenue to exceed 1% of GDP in this year. That's being well over $30 billion for tariff revenue in 2025. But it's helping the U.S. government's bottom line. But you could argue what's been going on in the back end has not really paired with that kind of discussion. We've seen yields creep higher in the 30-year yield. We're now getting close to 5% yet again. We've erased the gains in yield from that weak NFP print at the beginning of the month. We're up 11 basis points over the last 4 days. Whether this is worries about inflation after the hot PPI print or perhaps upgrades to growth expectations after a better than expected earnings season, that really remains to be seen. But while we're talking about the back end, we have to talk about what's going on in gilts. UK 30-year, the highs of the year, trading at 560 for the 30-year yield. It's also been up substantially over the last few sessions. And this has been a mix of things. We had better than expected data last week. The payroll number came in better than expected. And then we had the growth numbers on Thursday, also not confirming the worst fears for the UK economy. And this in some way is a double-edged sword here, Guy. You have better than expected growth outlook, but then that back end rise in yields is deteriorating the UK government's fiscal picture. And take a look at what's been happening in linkers. I bring this up because the UK has 25% of its debt pile in inflation-linked securities, and those yields have now surpassed the trust era highs and are trading at the highest since 1998. Again, a double-edged sword for the UK economy when you're thinking about debt sustainability.
Yeah, you can't inflate your way out of it, basically. That would seem to be the argument if you have that many linkers. Seemed like a good idea at the time. Valerie, thank you very much indeed. Rufaro Chiriseri, head of fixed income for the British Isles. Nice to include Guernsey and Jersey and the Isle of Man. RBC Wealth Management joining us now. Good morning.
Good morning, Guy.
Linkers, the UK seems like it's between the devil and the deep blue sea right now, and it's really difficult to see a way out for the Chancellor, for the economy more broadly. What do you make of current pricing? Can the Bank of England cut any further? What do you think the outlook for inflation is? What do you think the outlook for linkers are and for plain vanilla bonds?
I think it's sort of a mixed picture, right? Because I think the pricing action that we're seeing in the bond market at the moment, it's really sort of feeding through, I guess, it's anticipation for, is that inflation print going to be hotter than what the BOE had initially anticipated?
Yep.
I think after the US data, we did see inflation came in line, but then the PPI data started to show that inflation might be something that's coming back to the fore. And so that food price aspect as well, mentioned by Claire Lombardelli, that's still an aspect that a lot of market participants will be watching for. And so ultimately, I think it's some of those inflation expectations coming back into the market once again. And we've started to see it in break-evens. And we sort of look at 1 year out inflation expectations. They've tracked a bit higher. So that's feeding into linkers. But we think ultimately the inflation picture is going to be driven by what's happening in the wage market. And so we think that's actually going to track lower this year.
Okay.
And we look at the CFO surveys, sort of 3.5% to 4%, and hopefully that should help to feed to have a lower inflation figure. But of course,
that's not a great outcome. But maybe a way of defeating inflation.
So I think ultimately it's not necessarily that inflation will be at target, but it's tracking downwards.
Right.
And I think that's the key thing. The BOE already forecast 4%, which is a pretty punchy number for September. Yeah. But we're hoping that through the course of the year, as this wage pressure starts to feed through. Not necessarily this year.
The next 12 months.
Over the next 12 months. I think certainly that wage pressure is starting to ease into the back end of this year. And that's really because we're seeing that weakness in the labour market. We've got essentially a labour market below equilibrium at the moment. And so essentially that should hopefully feed through to lower wage pressure going forward.
Is the UK story being driven entirely by domestic drivers, Rufaro, or is there an international dynamic going on here? Because as Valerie was describing, some better than expected GDP data, that's the sort of positive take on why yields go higher. But we're seeing globally, you know, whether it's Germany last week or Japan just recently, long end yields, certainly there's an issue there, and the world is worried about debt sustainability and fiscal spending. So is this an entirely UK story, and those worries apply to the UK, or is there this whole global story taking place?
I think it's not unique to the UK, and we heard from Dave Ramsden at the MPC that sort of at the conference that they were saying that this was not a UK story only. We've seen the same thing across most key markets. What's, I suppose, more starkly sort of surprising for the UK is that we have seen quite a bit of steepening, sort of 5 to 30s for the UK. That's steepened quite the most. The US and Germany are sort of on par. Japan is steepened even further. So it's not a UK phenomenon only, but certainly for the UK, some of these prospects around, I suppose, what does the fiscal picture look like? What's going to happen with QT? That's also another big risk for the gilt market. And so the market's really looking for that QT aspect to be dialed down, their envelope to be much smaller. We think it might land around that 62 billion level. And so that would mean that the maturities coming up, plus perhaps about 13 billion of sales, that should help to sort of keep at least a lid on the long end of the yield curve. But of course, term premium is also coming back to the fore once again. OK, and then I suppose the big thing happening this week is kind of quiet, really, isn't it, in terms of global macro agenda? But we have got Jackson Hole taking place at the end of this week. And, you know, that can have an impact on the global narrative around fixed income. Are you expecting no clues from Jerome Powell? And clearly your focus is the UK, but all global markets will be watching what he has to say. Absolutely. I think the way the cards were stacked for Jackson Hole in 2024 is quite different to how it is today. Then we had unemployment that was tracking higher. We'd had 4 months of weakening jobs data. And then inflation was also tracking downwards. So the policy direction there was pretty clear. But we sort of look at the sort of situation that we've got today. Inflation, yes, we didn't sort of get big upside surprises, but in that sort of goods sort of sector, you're starting to see a bit of warming up in inflation there. And so, and we still think some of that inventory sort of wind down will start to feed through into consumer prices going forward. So inflation still does remain a risk. And the jobs market is sort of a low hiring, low firing mode. And so it's not necessarily in sort of deterioration. And so perhaps this is where it's finally balanced for the Fed. So perhaps the market is maybe a bit too excited in terms of that they'll get I guess, big clues from Powell. I think it would sort of teeter on the lines of finally balanced. Final
quick question. Credit spreads are epically tight. I think we're kind of back to tights we haven't seen for like nearly 30 years. Do I continue buying?
We continue to like credit, but predominantly on the short end, and part of that is because of that tightening story. We think the risk of spreads widening is there. But at the same time, fundamentals are pretty strong. We are seeing pretty good demand going into credit. And so we think you can still pick up some credit juice, but perhaps...
Can it tighten from here?
Potentially. Spreads could tighten a bit further from here, but that'll be pretty sort of, that'll be record tights. But I think essentially the risk is potentially widening from here. And so we prefer to keep short duration. We like financials, we like communications. So we think some of those idiosyncratic plays would be quite interesting rather than a broad index exposure, given our spreads are so tight.
Rufaro, thank you very much. Thank you for joining us. Rufaro Chiriseri, Head of Fixed Income for the British Isles at RBC Wealth Management. Coming up, we'll get back to our top story this morning. We take a closer look at the whether we are getting any closer to peace following the Zelensky-Trump meeting in the White House. We'll be talking to Livia Paggi from JS Held, getting her perspective on the focus on security. What exactly is the US going to be able to deliver on that front? Is it going to be Article 5 how like Article 5, and would President Putin really agree to that? We'll get all the analysis. That's coming up next. This is Bloomberg. Welcome back, 7:30. This is the opening trade. It is Tuesday, the 19th of August. Let's take a look at the futures picture. And we do sense a little bit of upside in European futures, not by much, but certainly a little bit. It's more than we see in US futures. They are down by around 0.2%, depending on which index you look at. Do you sense any read across from the Ukraine conversations that took place in the White House yesterday? Some are suggesting so. Others are saying we're just sitting on our hands waiting for the next catalyst. Could that come from Jackson Hole? That is later on this week. We have a bit of data this week, but we don't don't have much in the way of data to focus on today. Let's have a look at the bond market picture and see how European bond markets have opened up this morning. We do see yields going a little bit higher here in Europe, not by much at all, but certainly a slight movement. And actually, the Japanese story has been interesting overnight, Guy. We've seen yields go higher a little bit there on the back of a 20-year auction that was a little lacklustre, continuing our focus on the long end, I suppose.
A little softer than anticipated. Actually, it was pretty much anticipated to be soft, so we knew that going in. Let's turn back to the geopolitics and talk more about what is happening there. The US President Donald Trump has called Vladimir Putin and urged the Russian leader to begin making plans for a summit with Volodymyr Zelensky after meeting the Ukrainian president and European leaders at the White House last night. European leaders made their case to Trump to avoid a quick deal with Moscow at Ukraine's expense.
I think that we had very good conversation with President Trump.
Very good.
And it really was the best one, maybe the best one will be in the future.
I think if we play this well, we could end this. And we have to end this. We have to stop the killing. We have to stop the destruction of Ukraine's infrastructure.
Now we are here to work together with you on a just and lasting peace for Ukraine. Stop the killing. This is really our common interest. Stop the killing.
The next steps ahead are the more complicated ones now. The path is open. You opened it last Friday. But now the way is open for complicated negotiations.
Everybody around this table is in favor of peace. And we work very hard, and we've worked very hard during the past few years to have a peace which is a robust and long-standing peace.
European leaders getting their say on the matter of what happens next in Ukraine. Peace, front and centre, but details we were hearing from Metz are going to be complicated, and how we make this work has yet to be determined. Let's find out all the other takeaways we got from the events in DC last night. Ollie Crook joins us with the details. Ollie.
Yeah, that's right, Guy. You can really sort of always rely on the Germans for that sober perspective to focus on the difficulties ahead, and I think that is something that you can't really sort of underplay at this point. All of that being said, just at a very broad level, this is a meeting that went much better, of course, for Zelensky than it did back in February. This is a situation in which European leaders are very conscious of the fact that the Trump train is leaving the station, and the only thing worse than being on a train whose direction you don't know is entirely where it's headed, you don't not necessarily familiar with the route, is not being on the train. So they're making a full-throated effort to get on board completely. They thanked Donald Trump repeatedly, and there are sort of three main priorities that they wanted to take away from this meeting. The first was to get more detail on what these Article 5-like security guarantees that the United States now has been talking about for the first time over the last 48 hours. What do those actually include? What is Europe's role within that? That is something that we are starting to get more clarity on. We still have a lot of ambiguity around it, but it's clear that this architecture is being worked on. This idea of a ceasefire, this was really pushed by Macron in March. It's something that Trump really has sort of been pushing back against now over the last 48 hours since that meeting in Alaska. There's always a question also about the trilateral meeting going forward. When will that happen between Trump, Putin, and Zelensky? And of course, I think they'll also be reassured by the fact that territory was not something that was so prominent in the conversation. There's pressure on Zelensky to give up territory. Trump has been reiterating that this is a Ukrainian decision. Have a listen, though, to the conversation that we had in the Oval Office, a little flavor of the change in tone that we had between Zelensky and Trump.
We need to stop this war, to stop Russia, and we need support American and European partners. We will do our best for this.
If everything works out well today, we'll have a trilat, and I think there will be a reasonable chance of ending the war when we do that.
And sort of looking ahead to what is next, we got some idea of what Trump has in mind in terms of the sequencing. He came out on Truth Social saying this: at the conclusion of the meetings, I called President Putin and began the arrangements for a meeting at a location yet to be determined between President Putin and President Zelensky. After the meeting takes place, we will have a trilat, which would be between the two presidents plus myself. We're starting to see some reporting here from Reuters recently that this meeting could take place in Hungary as soon as in the next 2 weeks. That being said, no one expected the Putin-Trump meeting to take place in Alaska, so we take that with a grain of salt. All of this being said, the European leaders are unified. They came to D.C. with a single message, but they still need to go back to their homes in Europe and sell this at home. There is a lot of money that will be involved in whatever Article 5 style-like security guarantees looks like. There will also be the question about boots on the ground looking forward. This is something that I've spoken to many German officials about over the last few months. It is something that the Germans, for example, a large supporter of Ukraine, have been very reticent to sign on for, force. So there is a huge amount of work still to do in the future. Though what is very clear, it seems, from this meeting is that this architecture of what security guarantees will look like has become clear, and it's something that they're all very much working on over the last few weeks and continue into the next few weeks.
Oliver Crook in Brussels, thank you very much indeed. Let's get more commentary on what is happening here and what happens next. Livia, Paggi, Managing Director of Strategy and Risk Advisory at JS Held, joining us now. Where do we go from here? The meeting at the White House seemed to go okay. Now what?
I think the first thing we have to acknowledge is what Trump has actually done with this summit by meeting Putin. I mean, he has entirely changed the direction of how negotiations have taken place. So what Trump's looked to do is he's effectively looked to normalize relations with Russia, treat it as a great power on par. And really, it looks like, Europeans and Zelensky have suddenly become secondary players. This makes it all much more difficult to predict what can happen next. And certainly, although it's a win for Zelensky that he's been able to have this meeting, I think the future is still very uncertain.
What probability would you assign to Putin accepting a across-the-table meeting with Volodymyr Zelensky?
I think that Putin might be willing to accept the meeting with Zelensky, as this is one of the conditions that Trump could set, and certainly they are now on what appears to be good terms, or certainly there is a dialogue that's open. But what we have to remember, and what's key to remember, is that Putin, for this is not just a conflict about territory. This is a conflict about sovereignty and domination. So it is very difficult to envision what an endpoint looks like that would be satisfying for Putin.
Livia, good morning. What role would you expect the US to play in security, in any post-war security for Ukraine? President Trump kept talking about this in the context of the US playing some kind of coordination role. What thoughts do you have on what that might look like?
At the moment, we've talked about there's a possible arms deal that the U.S. could continue to support Ukraine militarily to give it protection. And then really the second point, which is what Giorgia Meloni brought up, which is sort of like a NATO Article 5 support, which is that there could be troops on the ground. But the reality of that is much more difficult in practice. For example, just take Europe alone. The Germans are very ambivalent towards the idea of putting troops on the ground, although Starmer has said that that is something that he would be willing to do. In the U.S., also similarly, I just saw a poll come out that 20% of Republicans are not favorable of sending troops on the ground. So certainly now that means that probably we're talking about supporting, the Ukrainian drone system and giving arms. And that's what looks most concrete at the moment. But certainly troops on the ground, I don't see really yet how that would look in practice.
And Livia, I know our focus is very much on Ukraine right now. We don't know what conditions are going to be attached in terms of having to give up any land that is either occupied or not yet occupied by Russian troops that Ukraine might be end up agreeing to. Are you concerned that we end up in a situation where Russia is essentially rewarded for its hostility? And what kind of read across into other fields of action should we be thinking about there?
I think the biggest issue with Russia at the moment is, as I said, it's an issue of sovereignty and domination of a certain part of Europe where it feels that it has the right to influence and have political oversight over. So therefore, it's very difficult just to resolve it from a immediate territorial point of view. The biggest concern is that obviously if you give up the Donbass, then what would be next? Would it be the Baltics? Would it be Poland? And this is a particular concern for Europe, which obviously the U.S. doesn't have the same issue because the conflict is not on its territory. For Europe is, where does it stop? How do we put the right lines in place that this conflict can end, not just in the immediate short term with a ceasefire or a peace deal, but also in the medium to long term? And that is the most difficult question.
And obviously those countries you mentioned, some of them are NATO members. I mean, that still matters, does it?
Yes, absolutely. And in fact, if you see many of the Baltic countries and Poland, that is where the defense spending is going up. And that would create a much more difficult situation for Europe, because that is when no longer can you ponder whether you can send in troops or not, but that is where likely you would have to. And that would fundamentally draw in the rest of Europe into an on-the-ground conflict.
Livia, thank you very much. Thanks for joining us. Livia Paggi, Managing Director of Strategy and Risk Advisory at JS Held. Coming up on the programme, we'll be watching Saab and Ericsson as Canada's industry minister meets with the Swedish companies to forge investment deals. We'll get details on that in our Stocks to Watch. More on that shortly. This is Bloomberg. Welcome back. This is the opening trade, Tuesday the 19th of August, and the futures picture for Europe looks broadly positive. There's not a lot of data around this week, certainly not in today's trading session. There's plenty of geopolitics to talk about. We spent a lot of time talking about Ukraine. Let's talk about some of the other geopolitical dynamics that are of importance right now. The Indian Prime Minister Narendra Modi hailed Russian leader Vladimir Putin as a, quote, friend, and discussed bilateral cooperation with him in a phone call. The call comes as Modi's government moves to bolster relations with China. Modi is due to meet with the Chinese Foreign Minister Wang Yi today as both nations push to normalise relations amid diplomatic tensions with the United States.
Develop confidence to dispel interference, expand cooperation, and to further consolidate the momentum of improvement and development of China-India relations, so that while pursuing our respective rejuvenation, we can contribute to each other's success.
Having seen a difficult period in our relationship, Excellency, our two nations now seek to move ahead. This requires a candid and constructive approach from both sides.
For more, let's bring in Bloomberg government reporter Sudhi Ranjan Sen, who's in New Delhi and tracking these meetings and this relationship for us. What can we expect from Wang's meeting with Modi later today? The backstory here, of course, is that the relationship between China and India has been strained for the past 5 years or so, but perhaps being pushed closer together by other global developments.
I mean, we are not expecting some major breakthroughs or major announcements, but this meeting in itself is a huge message. That's one. And number two, what this meeting does, the Chinese foreign ministers meeting starting yesterday with India's foreign minister, and now the ongoing meeting with India's national security advisor Ajit Doval, and later with the prime minister, is setting the tone for Prime Minister Modi's visit to China later in the month. Mind you, this is going to be the first visit of Prime Minister Modi to China in 7 years. And that kind of gives an indication and an understanding of how bad the relations were following the border crisis. Both sides since then have kind of moved and tried to quieten down the border tensions. There has been a lot of improvement on the border. Both militaries have pulled back substantially, reducing the possibility of an unintended war. So a lot of positive developments on the military side. Now what both sides are looking at is to normalize and get into a working relationship. And therefore this meeting, while there may not be big announcements, is an indication and a message towards that.
Narendra Modi spoke to Vladimir Putin after the Trump meeting. What do we take away from all of this, and the fact that he called him a friend? How significant is that?
Well, I mean, it is significant that, our Prime Minister calling Putin a friend, but it is not unheard of. India and Russia have a very, very old and a time-tested relationship. And it goes back to the Cold War, and it is sustained. India's dependence on Russia, on fuel, on energy, is very, very recent. But India's dependence on Russia for military hardware, for support in the United Nations, are all time-tested. And the fact that President Putin took time off took the pains to call up Prime Minister Modi to brief him on his discussions with President Trump just shows the closeness of the relationship. And this is happening at a time when, India has been berated by the United States for buying Russian oil. So the context itself makes it a very, very important call, although there are no major takeaways from it. It is the messaging of it all that makes it important.
Thank you very much, Sudhi. Great to get your perspective. Bloomberg government reporter Sudhi Ranjan Sen with the latest on the relationship between China and India and global geopolitical developments there. Let's talk about markets then with our Markets Live executive editor, Mark Cudmore. 3 minutes on the markets with Mark. And Mark, we've had considerable developments of a geopolitical nature. We were just talking about the relationship there between India and China, and Russia comes into that. And then elsewhere, we've been focused very much on the White House and all of the meetings that have taken place there with regards to Ukraine. Does any of that cut through into markets? Some people are suggesting there's a little bit of upside maybe for Europe, but it seems too early to be really making that call. I wonder how, from a markets perspective, we watch the developments around Ukraine.
I think you've summed it up pretty well there, Anna. I think the fact is we have made a little bit more progress than was probably expected by most people in markets a week ago. There are signs that potentially a peace deal is available there, and I think that's got the market a little bit optimistic. As you say, it'll take some time, and there's still lots that can go wrong. So we've got a slightly higher level of optimism that's priced into market. You can see that European equities are doing particularly well this month compared to most other global markets. They're having outperforming on that basis, and I think that's kind of priced in from there. I think it's going to be hard for us to nudge further from there. I don't think in the short term it's the forward-looking dynamic unless those kind of talks get derailed, but definitely it has been a driver of the optimism in the last few days. What's interesting is it's not kind of spreading into global optimism. We seem to have kind of stagnated a little bit in global markets outside Europe.
Things are getting bleak when we start talking about the gilt market again. I hear you're interested in UK inflation.
Yeah, I'm not normally excited about UK inflation. Of course, UK data has been so undermined in recent years. We're always a bit suspicious of it. UK inflation's always way above target, but it's really very far above target and not getting any close to target. And of course, we've still got cuts priced in. And I know the economy is not doing great. But, look, long-end gilt yields are really kind of getting quite a bit higher again. And I think this is in a backdrop that the global story is yields and the long end are rising everywhere again. We're seeing it in Chinese yields, which wasn't part of the dynamic before. We're seeing obviously in Japanese yields. US yields are only about 10 basis points higher than they were a week ago, but the point is they have bottomed. They are rising again this month. So I think we're seeing, the word bond vigilantes gets used a bit too freely, and I'm probably going to make that same error here by saying we're seeing the slight creep of bond vigilantism creeping back into the market this month. And I'm worried, given Jackson Hole's coming up, that it might really accelerate. So I think bond yields are the next big catalyst for markets, and I see higher bond yields being a problem for global stocks over the weeks ahead.
OK, and Jackson Hole, do you think that Jerome Powell is going to try hard to say very little, or will he have some other aim in mind, Mark?
I think he is going to try, saying very little and trying to keep his options open. What that will essentially mean is maybe pushing back in the idea of validating a September cut. I don't think that the data warrants that yet, but he might want to have a September cut if the data we get in early September is really, really poor. So I think he's going to be slightly hawkish, but not overly so, which is going to leave the market a little bit disappointed.
Great stuff, Mark. Thank you very much indeed. Bloomberg Markets Live Executive Editor Mark Cudmore. MLIV is the function on your Bloomberg. That's when you'll find Mark and the rest of the team. Lots of commentary this morning on what is happening in the gilt space. Let's turn from fixed income to equities. What's on Chloe Melly's mind this morning in terms of the stocks we should be watching?
Good morning, guys. So let's keep an eye on European miners today. That is after BHP, which is over in Australia, reported a major fall in profits. And that is because there's been a real pressure on iron ore prices because of weak demand from China and also a lot of global supply. All of that has got consequences, of course, for European listed miners, UK listed miners in particular. So let's keep an eye on Rio Tinto, for Expo, which has been having the worst year out of all of them, and Glencore as well this morning at the open. Moving on let's go over to Sweden, where we might see a bit of activity in the shares of Ericsson and Saab, and that is because Canada is trying to forge an economic partnership with Sweden, and the industry minister is meeting with those two companies. For Saab in particular, Canada might be buying some of its fighter jets instead of Lockheed Martin, so that is quite important. This is all in the context, of course, of Canada trying to really improve its relationship with Nordic countries because its relationship with the US is deteriorating at the moment, of course. And then finally, let's end on a downgrade for Merck. So Barclays downgraded Merck, the German biotech company, this morning. We have seen a steady slide in the shares, and that might continue today. We are down 35% over the last year. And Barclays said that this had a lot to do with the tariff uncertainty that is still, of course, weighing on the outlook for that company.
Chloe, thank you very much. Our equities reporter, Chloe Melly, with the latest on some of the sectors we're watching. So we're watching the defence names. Yesterday's session was pretty muted, Guy. We're down by a quarter of 1%. Vestas was a big gainer. But these are really idiosyncratic stories, aren't they, away from the global narrative?
We're in the middle of August. We have to bear that in mind, so that's something that needs to be borne in mind. Also, the catalyst this week come later in the week.
Yes, Jackson Hole, perhaps.
Jackson Hole, obviously, is going to be the big one. We'll watch for what exactly Powell does. That still feels like it's going to be the major market mover. But this defence story, I think, is going to be interesting. It's going to be interesting to watch some of these names this morning, try and understand what is going to happen here. You have seen a little bit... It's hard to... If Europe is putting boots on the ground, does that imply more spending, or is the current spending kind of the level we should stick at?
Yes, exactly. Is there anything new in these latest developments? And more broadly, what does any kind of peace dividend look like for European stocks more broadly, I suppose, is the wider context there. We'll be bringing you the market open, of course, in just a few minutes' time. European stock futures point higher. This is Bloomberg.
Tuesday morning, good morning. So we've had a rally in just about everything recently, and I think equities are struggling to digest that maybe over the last few days. I think there's an obvious catalyst out there, is there? I think one's coming, or two or three potentially coming by the end of the week. But Monday, Tuesday have felt a bit lackluster when it comes to a kind of pure market story. I think the gilt market story is interesting, but the focus has been on geopolitics. So I think the markets have kind of just gone sideways. You saw that yesterday when it came to equities. A little bit of choppiness in the European session. We pushed up to, this is where we closed. US markets ticked up a little bit from there, but not by much. US futures are down this morning. I don't think there's an obvious kind of read this morning that gives us a clear sense of direction, Anna.
Yeah, absolutely. So we'll be keeping an eye on some of that geopolitics, but as you say, perhaps not really setting the pace, waiting for later in the week when we get Jackson Hole and other developments to see if that tells us a little bit more. Let's focus in on a few stocks that could be active this morning. One sector to watch is the mining sector. We've had numbers out of BHP, and even if they showed a retreat from the performance of the previous year, there was some optimism being expressed by the CEO around China and a way that might develop. So we'll watch that. And that stock, actually, BHP was higher in the Australian session, so that's a reason to watch it as well. We will focus in on some of the potential suppliers to the Canadian government as well. Saab and Ericsson. Chloe Melly was telling us earlier on that Canada is holding some conversations with Sweden on a partnership with Sweden, and that could result in them buying some more jets from Saab. So as a result, we keep an eye on those. And the defence sector more widely could be in focus because of the Ukraine conversations. And Merck KGaA is in focus, a downgrade at Barclays. And according to this list, we're also watching Coloplast, Guy.
We certainly are. Many stocks to watch. Not much of a macro top-down read, but let's see how these markets open. I think we're expecting kind of 1 or 2 tenths to the upside, but gains still nevertheless. US markets, remember, we are looking at futures a little saggier than that, soggier than that. So here we go. FTSE 100 out of the gates with an exciting and impressive 0.012% of a gain. As I say, I don't think these markets have a clear and obvious catalyst this morning to work with. Those catalysts are coming. You've got US retailers reporting numbers later on this week. Clearly, we're going to be watching Powell. You've got UK inflation data to watch tomorrow. There are things that are going to be happening that may give us a little bit more. I'm fascinated to see what the AVAT screen looks like in terms of the volume. I suspect we may be a little light on the volume side right now. But there you go. Look, European markets, I think, are just drifting at the moment. We're waiting for something to latch onto to give us a little bit of momentum in one direction or the other. But at the moment, we've had a great rally. we're coming into the middle of August. We're waiting for the next catalyst. That comes at the end of the week, arguably, from Jackson Hole, but we'll wait and watch. But at the moment, no clear sense of obvious direction coming from the index level. Let's get below the surface, though. Anna, what are we seeing in terms of kind of the single stock story and also some of those sectors?
Yeah, a bit of an energy theme actually playing out across markets this morning, Guy. And you mentioned this at the top of the last hour, the fact that we've seen a retreat in oil prices and partly linked to what's been going on with regards to Ukraine. And maybe we haven't done quite enough justice to that theme this morning, because we see both ends of the sector picture responding here. So the best gaining, or one of the best gaining sectors was travel and leisure. In fact, it's just lost that point. That spot, technology has taken the top spot, but that's one of them. And energy is the worst performing sector. So there's that energy play there. We're also seeing basic resource stocks go a little bit higher this morning. Technology going higher, up by 0.4%, which is interesting in the context of all the Intel news. We talked about that a lot at the top of the programme. Not sure there's a huge amount of read across there, but certainly there's a lot of news being written about the technology sector and about the chip sector at this point, whether it is Nvidia's ability to sell into China, whether it is the government purchasing a stake in Intel, which is, according to our reporting, being discussed, whether it's SoftBank taking a stake, which we've had confirmation of. So there's the tech theme for you, but also, yeah, this energy theme, evident to some degree at least across these markets.
Yeah, money rotating out of Shell. You can see that with BP a little bit as well. You're also seeing money rotating out of some of the big pharma names. So Nova's a little softer after its recent good form in terms of some of the drug delivery news that we've had from that company treating liver disease. We saw that yesterday, so we're kind of rotating back out of that. But defence stocks is actually an area of interest. So Rheinmetall a little bit softer. You've got BAE Systems a little bit softer this morning. Thales is down. Saab's a little softer as well. Is there a geopolitical narrative that comes out of the peace talks that we saw yesterday? Is that a view that actually we're moving towards peace and there is a peace dividend, and maybe actually you take some of the recent kind of very strong pricing out of these stocks? I don't know. It's so hard to read on a day-by-day basis and get a kind of clear and obvious line between one and the other. Yes,
although we do have a number of those defence names down by more than 1% today. So we've got Rheinmetall, Leonardo, Thales, Saab, Hensoldt, a number of companies that you would include in that defence space are retreating a little bit this morning, more than 1%, as I say, on all of those names. So we'll continue to keep that.
Look at it over the last Rheinmetall 5-day charts. It's still up by nearly 5%.
Yeah. So not really cutting through, perhaps. Let's get a broader perspective on where we are on markets. Eryk Wytenus joins us, EMEA Head of Investment Strategy at JPMorgan Private Bank. Eryk, good morning to you. Thank you for joining us. Midsummer, 19th of August here in Europe. We don't have a great deal of data points to trade on, but we have plenty of geopolitical news. And we have stocks on good form, it seems, not far from all-time highs on global stocks, driven higher by the earnings story, AI. We've got Jackson Hole looming. What is the big picture driver for markets right now for you, Eryk?
Stocks really are on good form, and it ultimately comes down to earnings, which have been very impressive. The last 3 quarters of earnings in the U.S. have been plus 18%, plus 13%, and it looks like this quarter will be about plus 12 to 13% relative to expectations just before earnings season of about 5%. That is rather impressive resiliency of the earnings delivery of the major companies in the U.S. We have an increased amount of buybacks that are also expected, which is helpful from a supply-demand standpoint. And overall, U.S. corporates are showing an impressive amount of dynamism to ebb and flex around tariffs, adjust pricing, source the supplies that they need. And lo and behold, risk asset prices are performing nicely.
Okay. The Grinch would say, isn't this just the tariff impact delayed? That tariffs have not hit as quickly as expected, and there was plenty of inventory build-up ahead of the tariffs being imposed, and so we're not seeing the full impact of those tariffs, I suppose.
August might be slightly early for a Grinch reference, but I appreciate where you're coming from. And yes, it is certainly possible that an increased amount of tariff impact gradually feeds through to the consumer. For example, just recently, our analysis showed that only about 40% of the tariff impacts were being borne by the consumer, and then more recently, north of 45%. So if that trajectory continues, we could start to see more cost pressure start to impact the consumer. But one of the things that's very fortunate about the circumstance is U.S. corporate margins are close to all-time highs, so they've been able to absorb a good chunk of the overall tariff impact, therefore not passing it all on to consumers. Lo and behold, consumers continue to spend. We just saw some solid U.S. retail sales numbers last week. And again, the risk rally ultimately marches on.
An eventful I read your notes this morning. You kind of buried the lead, to my mind. A little bit, maybe at the bottom. An eventful 2025 now at healthy levels of risk. Asset rally suggests a close look at one's asset mix. That sounds a little cautious to me.
Well, the point that I'm trying to get at there is, so of course we have Jackson Hole later this week, which will be incredibly closely watched. Every sentence, every piece of grammar, every utterance, and so on. What I would encourage people to think about is if you fast forward, say, 6 to 9 months in the future, we could be maybe 2 full points, about 200 basis points lower in U.S. cash rates than we were off of the highs. That's a big change because we cut 100 basis points last year. It looks likely the Fed will start cutting in September. And then if you fast forward, say, to about the springtime of 2026, we could be about 2 full points off of the highs. Therefore, we think it is very sensible to think about how much cash you have in your asset mix and lock in duration or considering other ways to produce greater degrees of yield because the cash yield has been attractive in dollars.
Yields are going up at the moment. It's not going down. Long-end yields are going up, not down.
But the overall cash levels that you can achieve are going to track most likely what happens with Fed funds.
You're confident the Fed's going to cut rates quite aggressively, though?
Aggressively is probably a strong
term. Another 100 basis points.
We think it's likely they start with 25 in September and take a bit of a gradual path and then maybe land at about 3.5% or so at some point in 2026 as an ultimate terminal rate. And therefore, those cash yields that you can achieve on money market types of products are going to head south.
Why are they cutting rates?
They've got substantial weakness that's starting to develop in the U.S. labor market.
And what happens in a recession to assets in the States? If you get a recession, what happens?
Well, of course, you would have pressure on risk asset markets overall. Right. You also would continue to see yields most likely head south, and that's where the fixed income component of your portfolio would probably help buffer what could happen there. But we don't look for a U.S. recession. The resiliency of the U.S. economy has been impressive. We just discussed earlier how consumers have continued to spend. Overall, we think a bit of an insurance cut type of approach might be what's forthcoming out of the Fed and a bit of a gradual path to softer rates. So
this is a picture of a weaker labour market, but not weak enough that it undermines consumer spending and therefore, stocks don't. Your view is that stocks don't have much to fear from, to Guy's point, the reason that the Fed is cutting rates.
Correct. It ultimately does come down to earnings, which have been delivering and delivering. We've got an extraordinary amount of capex that is committed to for 2026 out of the big tech companies. And we have that sustainability of what's been happening with the overall performance of the U.S. economy. But back to Powell for a moment in terms of the Jackson Hole confab on Friday. There's going to be a bit of a balance that he's going to have to think about there between the softer amount of labor performance that's been coming through. The 3-month moving average for non-farm payrolls in the U.S. is now down to only about 35,000, which is not a spectacular number. But we also have a degree of upside inflation pressures that have been coming through most recently, PPI numbers and others. So there's a little bit of a balance there about what to signal between the Fed's dual mandate, between trying to help ensure full employment and also help ensure price stability.
Yeah. You see, I was mentioning the Grinch guy, but he's the one who's looking for the cracks, aren't you?
Green makeup at the ready. Eryk, nice to see you. Thank you very much indeed. Eryk Wytenus, EMEA Head of Investment Strategy at JPMorgan Private Bank. Core 6 looks like this morning. A little bit of movement in some of the defence names. Rheinmetall, as you can see, off by 2%. Tech a little higher. ASML up by 0.8%. What else are we watching? We should probably spend some time, a little bit more time maybe, focusing on what that defence story looks like with Chloe Melly.
Good morning, Guy. Yeah, so let's start with defense today. We can see a little bit of weakness. That's off the back of the latest updates from Trump's efforts to bring about that peace deal in Ukraine. So it is pushing for a meeting between Putin and Zelensky. And off the back of that, and maybe us moving closer to that potential peace deal, we are seeing some weakness in some key defense names this morning. Rheinmetall, Hansel, Leonardo, and BAE Systems. We've got a wall of red across that sector this morning. Moving on to the mining sector. So the the read across from the BHP results actually was fairly positive. So we can see Rio Tinto, Ferexpo, Glencore, ArcelorMittal all moving up. Even though BHP reported a fall in profits, it did indicate a little bit of a brightening outlook there. So that is reading across quite positively for that mining space this morning. Moving on to Doc Morris, which is a pharmaceutical retailer in Switzerland. The first half adjusted margin missed estimates, and that is leading to a little bit of weakness in that stock this morning. We're down about 4.5%. And then finally, IWG is seeing, so IWG is the provider of co-working spaces, and it is also down because the forecast was a little bit also lower than expected. So we can see actually a lot of weakness. We're down 13% in IWG this morning.
I remember the WeWork heyday. Chloe, thank you very much. Thanks for joining us. Chloe Nelly from our equities team with a look at some of those stocks on the move this morning. Coming up on the programme, after Ukraine reportedly offered to buy US weapons, how will defence companies respond to pledges of security guarantees? We'll take stock, as Chloe was just doing for us there, the little bit of weakness that we're seeing in defence names, even if they've been up very, very strongly of late, of course. We'll talk about the sector next. This is Bloomberg.
Welcome back. What are we calling it? 15 minutes into the equity market session. We've not gone very far since the open. I just want to check the AVAS and see kind of what the volume figure looks like, because it's been quite quiet over the last few days. There are catalysts coming. There just aren't any obvious ones today. And yeah, we're down quite hard in terms of the volume picture that we are watching quite carefully at the moment. Defence stocks certainly front and centre this morning. That's where actually there is some quite interesting action. And as you can see, the names are generally on the screen lower right now. Not a lot. I take a look at the 5-day chart, you'll see actually this movement is significant, but not kind of out of kilter with what we've been watching. You've seen some quite big upswings. Donald Trump pushing a Putin-Zelenskiy meeting. He's also stressing that European nations are, quote, going to be taking a lot of the burden for security guarantees, though the US would be chipping in, apparently. But the scope of those guarantees, unknown at this point. For more details, we're joined by Bloomberg's Jerry Doyle. What did we learn yesterday about what Europe is going to have to do in terms of the commitments that it's going to have to make and how big it could be?
Honestly, we didn't learn much. Security guarantees can mean all kinds of things. Yeah. It can mean boots on the ground. It can mean additional supplies of equipment and war material. It can mean additional ISR, intelligence, surveillance, reconnaissance, satellite pictures, things like that. But right now, we don't know what those security guarantees are going to look like. And as a result, we don't know what impact it's going to have on defense companies and what they might be asked to provide.
The initial read in markets this morning, as Guy was just pointing out, is a little bit of weakness in defence stocks. Is that about the overall small steps towards some kind of peace deal? Is this what might be a peace dividend for the rest of the market would end up being a negative for defence companies? Is that the big picture takeaway?
It could be. I think it's probably more just a function of uncertainty. Nobody knows what's going to happen next, and so as a result, nobody knows what it's going to mean for the defense companies and what they might be asked to contribute, and so investing becomes a little trickier.
What kind of capabilities historically have you needed to provide for some sort of a security force? Are there historical precedents here that we can look to?
I don't think there's a direct one-to-one precedent we can look at, but I think it's safe to say that if there are troops on the ground, they would need things like small arms and ammunition, armored vehicles, things of that nature.
They need to be quite mobile.
Yes, exactly. And then for sort of a larger picture, security guarantees for Ukraine to make sure that they were sort of safe against future attacks, you would need higher-end equipment such as missile defenses, air defenses, more sort of elaborate and expensive gear.
Yeah. On the one hand, you could see that if we did get peace in Ukraine, that might weigh on defence stocks at one level, because obviously if there's not active fighting, then there's less requirement perhaps for some of the things you just described. But on the other hand, the burden to provide defence is now going to increasingly fall on Europe and maybe less on the United States, and maybe these European players actually set to benefit from that. Is that big picture still what we're looking at here, Jerry?
I think so. And Europe has already committed quite a bit of resources into expanding its defense industrial base. That's not going to go away. So a lot depends on the scope of what a security guarantee would look like, how many troops are on the ground, what needs to be supplied to Ukraine. But the defense industrial capacity is there, and I don't think that's going to dissipate.
Okay, Jerry, thank you very much. Thanks for the update. Jerry Doyle, Bloomberg's global defense editor. Let's switch focus then from the defense sector to the mining sector. We've had plenty of news flow from this overnight as well. BHP's full-year underlying profit fell to its lowest level since the pandemic as prices of its key earners, that's iron ore and coking coal, came under pressure from softer Chinese demand. Let's go to Bloomberg's Martin Ritchie in Shanghai, who has more details here. So that's the sort of negative story that we can tell here, I guess, Martin, about the comparison with last year. But actually, the CEO trying to tell a slightly more positive story around China. And last I looked, that had certainly pushed the stock price up during the Australian session. So what's the big takeaway?
Yeah, I think you're absolutely right to point that out. We've seen the headline number, the profits down, I think 26% from a year earlier, and the lowest since the start of the pandemic, actually in 2020. So it's a low result, but it is generally quite expected. BHP gets a lot of its earnings from iron ore, obviously, a lot from coking coal, which are reliant on China's steel industry. Now, in that regard, demand hasn't really slumped, hasn't fallen very much. But at the same time, supply of iron ore is rising and China's economy is sort of slowing down. And so prices have come down. But on the positive side, as you pointed out, and as Mike Henry was very keen to point out, demand is still, by standards of recent years, still relatively strong. You've seen pockets of strength, for example, in Chinese exports, which also helps steel in some areas of manufacturing. Electric vehicles is one example. So there's still, despite the property slowdown in China, which everyone knows about, this was a sort of in-line result.
Is copper going to make that big a difference going forward? How does the balance work? They were highlighting how copper is one bright spot. Is that set to continue? And as we do see these large miners looking to have more exposure to copper, how far through the kind of revaluation process around that are we?
Yeah, I mean, copper is something that big miners, BHP topmost amongst them, of course, have been talking about for many years now. More than half a decade, going back even further, as like their big bright prospect. So you've got iron ore demand starting to fade. It's getting more difficult to find the best types of iron ore. So you're seeing BHP, Rio, many others try and get more exposure to copper, and that is a sensible strategy because copper demand is starting to expand very rapidly in a whole range of industries. In terms of the timing, though, it's a very long-term process. As Rio's CEO said fairly recently, they're still going to be digging up iron ore in huge volumes from Australia in a decade from now. So it's really a kind of long-term process where it's hoping that their earnings can stay at stable high levels rather than fade away along with the property boom in China.
Yes, we've seen iron ore prices extending declines, and part of that being attributed to these BHP numbers and comments then, Martin. And we've actually seen it declining for 5 straight sessions now. What is the bigger picture around the supply story that's weighing here?
Yeah, I mean, I wouldn't read too much into a link between BHP results and the iron ore price day to day. Iron ore has been steady just above $100 for quite a while now, and that speaks to still relatively strong demand in China. In recent times, prices have gone up because there's this expectation of what's called anti-involution measures in China to try and restructure the industry. That might actually help iron ore because it raises steelmaker margins. but I think investors are still waiting to see what the real fruits of that campaign are. And so iron ore is kind of following the macro mood at the moment, which is slightly downbeat, I guess.
Okay, Martin, great stuff. Thank you very much indeed, Martin Ritchie, on what is happening with the mining story after BHP. I want to turn our attention to what is a story that could develop later. Reuters is reporting that Nvidia is preparing a new AI chip for China. It will be more powerful than the H20. They are calling it the B30A, apparently. They're aiming to deliver samples, according to Reuters, to Chinese clients early as next month. Now, the indications are that US regulatory approval for this is not in any way guaranteed, but we have to remember, obviously, the deal that was done in the White House regarding effectively an export tax for some of these chips. Was it last week or the week before? And it'll be interesting to see whether this is a direct reaction to that effective opening up of the Chinese market, which kind of just leans against the idea of the US having security concerns.
Yeah, we're used to Nvidia making specific chips designed for the Chinese market. That's what they did before, but they were told to stop selling those particular ones, and now they're talking about a different variety. I think there's a nice line in the story that you quote here, the Reuters story, where Nvidia is saying that a variety of products for our roadmap are being evaluated so that we can be prepared to compete to the extent that governments allow. And that tells you a lot about the sector and where we're at in this sector right now. It's all at the, you can go as far as the government will let you, it seems.
Which government? So you've got the US government, obviously. Restrictions, export restrictions have been part of the landscape for quite some time, but you kind of wonder whether Trump is changing that. But the Chinese government as well. The Chinese government is very keen to ensure that actually China has an alternative to some of these chips. And the argument has been, certainly from Joseph Wang, that you want China to be addicted to US chips, and therefore you want to be as close to the edge of the envelope that is allowed on security terms. And it'll be interesting to see whether the Chinese push back on that. They certainly were last week, talking about the idea that there were security flaws, there were all kinds of issues surrounding some of these chips, and that we shouldn't be using them in anything government-related. And I just wonder how the balancing act of those two things are going to fall. There was also the DeepSeek story suggesting that DeepSeek was struggling, though some cold water was poured on this, using domestic chips to train. And maybe this, again, is a reaction to that.
Yeah, and Jensen Huang did have some success in persuading President Trump of that view. We heard him using those sort of Jensen Huang talking points, talking about the need for US chips to be there in the mix in China. So that's one of the chip stories that we're watching today. We started at the top of the programme, they're talking about Intel, and that's also going to be something that develops, because there are so many strands to what's going on with Intel. We've got Masayoshi-san and SoftBank through SoftBank taking a stake, a $2 billion stake, and 5 times larger, we have our reporting suggesting that the US government is considering taking a stake in Intel.
Is 10% nationalisation? I don't know. There's headlines in US newspapers talking about nationalising Intel. Is this what this is? I don't know. You certainly put the government on the board, maybe not the board, but certainly you put the government with a significant amount of influence. What happens? Does it take certain options off the table? Can you break this business up in the current form, therefore? Governments, as we discussed earlier, brilliant at running companies and giving companies winners. Picking winners are fantastic.
That's a phrase gets thrown around a lot when you see companies take stakes.
So yeah, is this we were discussing, Val and I were discussing about this. Is this a good thing for Intel or a bad thing for Intel?
Yes, indeed. Well, the stock responded positively to early conversations, early reporting around the US government taking a stake, but we'll see how it responds later today to these latest news lines, plenty of them around Intel. We will pivot back to the Ukraine story shortly. Coming up, Spain's Foreign Affairs Minister will be speaking to us about how the country is responding to Ukraine, taking on a number of other themes for us as well. This is Bloomberg. This is the opening trade. We're 30 minutes into today's session, and it's a bit of a mid-August feeling to markets, it seems, today. We're pretty flat across European equity markets, a bit of downside on the DAX, a bit of upside coming through on the CAC 40. But broadly speaking then, Guy, pretty flat across these markets, the FTSE almost entirely. So we've seen some underperformance coming through from some energy names, a weaker oil price, the defence names on the back of edging closer, perhaps, to any kind of resolution of war in Ukraine. That's weighing on defence names. To the upside, we've seen some technology stocks doing okay this morning, a lot of news lines around technology, but most of that based around the United States, around Nvidia and Intel, as we discussed earlier on, and some of the travel and leisure names getting a boost from a weaker oil price this morning. So net, that adds up to a bit of a waiting game, waiting for Jackson Hole guy and a bit of data middle of this week. So we've still got plenty to talk about as we get through the week.
In search of a catalyst. And the catalyst comes, as you say, towards the back end of the week. 411 up, 173 down. It's interesting to obviously that tells you that the weight is actually these are bigger companies that are to the downside. You've got light volume today. I think we can anticipate that in the month of August. Let's talk about 52-week highs. There's not many lows out there this morning. Bit of a sort of infrastructure theme. Hochtief is at a 52-week high, up by 9/10, nearly 1%. That stock is tracking a little bit higher. ADP is up by 1.23%. It's at a 52-week high. Prysmian's also up as well, 1.56%. So something of an infrastructure theme maybe running through European markets this morning. You're certainly seeing a few banks hitting 52-week highs. That's a given. There's only 3 or 4 though this morning. Some days there are absolutely loads of them. So a quietish market with an infrastructure theme maybe running through that, Anna.
Yeah, an infrastructure theme here in Europe, a tech theme developing then over in the United States. Let's tell you about some of the other stories then you need to know this morning. SoftBank has agreed to buy $2 billion worth of Intel stock in a surprise deal to shore up the struggling US chipmaker. Meanwhile, Bloomberg has learned the Trump administration is in discussions to possibly take a stake of about 10% in the company. Such a deal would make the US government Intel's biggest shareholder. The Indian Prime Minister Narendra Modi has hailed Vladimir Putin as a, quote, friend after discussing bilateral cooperation with the Russian leader. The call comes as Modi's government also moves to bolster relations with China. Modi is due to meet with the Chinese Foreign Minister Wang Yi today as both nations push to normalize relations amid diplomatic tensions with the United States. And President Trump says he's called Vladimir Putin to urge him to begin making plans for a summit with Volodymyr Zelensky. It comes after his meeting with the Ukrainian president and several European leaders at the White House just yesterday. U.S. Secretary of State Marco Rubio says Washington is working on security guarantees for Kyiv. Guy.
OK, let's talk more about what is happening on that geopolitical story and where we go from here. Oliver Crook joins us from Brussels with more details. Ollie, how unified is Europe in this idea that it is the Europeans that will be providing the bulk of the security guarantees? We obviously heard from those around the table yesterday, but not everybody was there. Is this a unified picture across the continent?
This is a unified picture that they want to present to Donald Trump, that they're all on the same page, that they're all in agreement, that this is going to be relatively easy to get through, because obviously that makes Donald Trump's job a lot easier if he feels like he's speaking to the Europeans with one voice. Remember, even during the trade negotiations, one of the big frustrations was that the Europeans don't speak with one voice. So on this issue of Ukraine, they really want to be speaking with one voice. But Guy, I think as to what you're alluding to here is that the difficult parts of this conversation, as difficult as the United States has been, as Donald Trump has been for the Europeans to get on their side, there are very serious, very complicated issues that they need to discuss, not just between each country within Europe, but domestically for their own audience. I mean, we are talking about basically taking on fully the sort of defensive measures of Europe on the European side from a financial standpoint. If there are those Article 5 style-like guarantees, what do they actually look like? Does it mean that the United States would engage in military conflict if, after a peace deal, Russia were to impose once again on Ukraine? That is still an open question. But at the end of the day, what the United States has sort of called for in private conversations is that the Europeans need to be basically on the ground in Ukraine if that's what's going to look like. And that is not something that there is total agreement on in Europe. When I have spoken to a number of German government officials, and we can say that Germany is one of the biggest supporters of Ukraine financially, verbally, and all the other sort of respects, they have been very reticent to commit to any sort of agreement like that that would mean German troops on the ground that would theoretically return fire on any encroachment from the Russians. So I think that this is going to be the very beginning of a conversation, one that is a lot more difficult, that just sort of is not betrayed by the united front that the Europeans wanted to present to Donald Trump. But this was a question of money, and it's a question of basically risk, of willing to put your own troops at risk, willing to put yourself in the firing line against Russia. That is why it's so important to get those security guarantees from the United States, because at the end of the day, if they can rely on U.S. support, that will make that a lot easier a decision to make for European leaders.
Ollie, thank you. Bloomberg's Oliver Crick with the latest on Ukraine. We're joined now to continue this conversation by José Albares, the Spanish Foreign Affairs Minister. Minister Albares, thank you so much for giving us your time. We appreciate it. Spain not directly represented at that meeting yesterday, although under the EU umbrella, I suppose, represented there. What did you make of the conclusions so far from those meetings at the White House? And underline for us why it was that Spain was not in attendance.
Spain is part of the coalition of the willing. Today at noon here in Europe, we will be joining, and we are a very important part in backing Ukraine's sovereignty. Yesterday I was discussing with the Vice Prime Minister of Ukraine about European integration. President Sanchez is in full contact with President Zelensky, and we are committed to back Ukraine as long as it takes. Yesterday, we saw President Zelensky backed by European leaders in the White House talking about peace. And any conversation about peace is welcome. But we must be talking always, giving the same content to the word peace, a just and lasting peace, a peace that will not be just a parenthesis between two words. That's why we need a ceasefire, first of all, to make sure that we stop the killing of people. And then we will want to see Russia, that is giving no sign of being in good faith, engage in real conversation for a just and lasting peace.
Yes, we've seen some in other European countries calling for that ceasefire, but President Trump doesn't seem minded to go in that direction. Just sticking with this theme of why Spain was not in attendance, does it have anything to do with the way that Spain stood apart from other European nations at that NATO meeting and didn't quite commit to the level of NATO spending that the United States wanted to see?
We have not got any signs of two things being related, because Spain is a very committed ally. We have a historical deployment of troops in the eastern flank of NATO with 3,000 soldiers, tanks, aeroplanes. We are an integral part of the security of the Baltic countries. We are present in countries like Slovakia, before in Romania. We have a Patriot battery deployed in Turkey, another NATO ally. And we have been, since the very beginning, part of the financial, humanitarian, and military equipment effort to Ukraine. So I think that the commitment of Spain to Euro-Atlantic security is out of question. And we, in the last NATO meeting, we have said that with a lower percentage than 5%, we could meet all the objectives, all the targets that we had to meet, both in capacities and in joining the Euro-Atlantic security. So I think both things are not related. There are many other European leaders that were not present. For instance, the current presidency of the European Union, the president of Denmark.
Minister, good morning. If the requirement was that Europe needed to put troops, boots on the ground in Ukraine, would Spain be providing some of those boots, some of those troops?
I don't like to make political fiction. The reality today is that Russia has not given yet any sign that wants a real peace. I want to see, first of all, if that Zelensky-Putin meeting becomes concrete, if they can agree on a ceasefire and walk towards a real peace. So there are a lot of things to talk, including security guarantees. And that's what we should be focusing today, and not in future scenarios that doesn't exist. The reality of today is that Russia continues to wage war, an unjustified war, against Ukraine.
How far would Spain be prepared to go in providing security guarantees for Ukraine? Were there to be a ceasefire or peace, how far would your country be prepared to go to guarantee Ukraine's security?
We have been giving all the support that Ukraine has been asking for and requesting so far. Military equipment of all sorts, financial assistance, humanitarian assistance, with 200,000 Ukrainian refugees in our soil. Accession talks for joining European Union were open during our European Union presidency. So we are on all sides helping Ukraine to defend its sovereignty and its territorial integrity.
Would Article 5, like guarantees, be acceptable to Spain?
Article 5 is not something that is on the table right now. The best security guarantee for Ukraine so far, today, talking with the reality on the ground, is to reinforce the Ukrainian army. Because that's what's providing today safety, sovereignty, freedom for Ukraine. And that's what we are doing, providing military equipment to make sure that the Ukrainian army is capable of guaranteeing sovereignty and territorial integrity for Ukraine.
If Spain were to be part, Minister, of these forces or a support effort to try and provide security for Ukraine, what role would Europe require the US to play?
I think we are both allies in Euro-Atlantic security. And the security of Europe is directly at stake in this war in Ukraine. That's very clear. What will be the future of Ukraine? It's also what will be the future of Europe. And we have been together, Europeans and the United States, since the very beginning of this war of aggression of Russia to Ukraine. So what I expect is that this continue in the same path. Both of us being together to make peace and to give security guarantees to Ukraine, to make sure that this is not just a break between two wars, but a real, just and lasting peace, because the security of Europe and therefore the Euro-Atlantic security is at stake.
Minister, I know that the domestic attention in Spain is very much on the wildfires that are taking place there, and Spain enduring one of its worst fire crisis in its history, I am told. Can you give us a kind of update as to when you expect these wildfires to be under control?
This is a terrible situation right now in Spain, with 40 fires that are active in different parts of the country. And I really want to have a thought for those that have lost their lives. The government is doing everything that is in our hand. We have thousands of people deployed fighting against this fire. And I want to thank all those countries, 7 countries so far from the European mechanism of civil assistance that are joining with their capacities to fight against this fire. The president today will be visiting some of those places. Unfortunately, there are many reasons for this, but climate emergency is very much related to this. This is not something that affects only Spain. We see right now several countries in Europe, and every year we have the same type of fire. That's why the president has proposed to all political forces a big state agreement to prevent, to reinforce the capacities and to do as much as we can against this climate emergency. We need prevention to make sure that this is the last time we see this sort of fires.
Minister, you started the conversation talking about the fact that Spain does not need to increase its defence spending because it can meet the capabilities that are required of it with current amounts of money being deployed. If we start seeing Spain using its military, though, to deal with wildfires and the environmental catastrophe, can we still argue that Spain is spending enough to be able to meet all its commitments, including fighting wildfires, and deliver everything at the same time with the current budget?
We will do it, and we are proving that we will do it. We have a European mechanism. Today, it's Spain that is receiving that help from several European countries. But during many summers in the past, it has been Spain putting its capacities, because we have a big capacity. We are a southern country with high peaks of heat. Therefore, we have big capacities to fight against fire with aeroplanes and with different equipment that we have been lending it to other countries. So you can be sure that Spain will meet all the targets, both the security targets that are EMEA by NATO. We are a very committed and reliable ally, and we are proving it with a historical deployment in the eastern flank, both with soldiers on the ground, 3,000, but also with equipment of all sorts. And at the same time, we have to make sure that this is the last time we see this type of fire, and that's why we have proposed to all political forces in Spain this big state national agreement to increase the capabilities and to increase the prevention even more than we have been doing it so far.
Minister, thank you very much. Thank you for your time. José Albares, the Spanish Foreign Affairs Minister. Coming up on the programme, UK 30-year inflation-linked yields hit the highest since 1998. We'll deep dive into what's behind these moves ahead of some key data out for the UK this week. This is Bloomberg.
49 minutes into the equity market session. Let's call it 50 minutes into the equity market session. As you can see, the picture is exciting, and particularly for the FTSE 100, going nowhere in a hurry. The FTSE 100 is unchanged this morning. You've got a little bit of movement elsewhere. It's largely down to kind of single stock stories that we're watching. But there isn't a clear sense of direction this morning. Defence is a little softer. Maybe that's one theme you can take away. Some of the infrastructure plays maybe getting a little bit more traction. But there isn't a clear catalyst this morning to work with. There are catalysts coming. Stay tuned. They're on their way. Let's talk about a story that we've all been watching quite carefully over the last few weeks. Air Canada's flight attendants are going to stay on strike. This after the country's Labour Board ordered them to go back to work. So this is causing the airline to delay plans to restart flights. The company's CEO, Michael Russo, spoke to Bloomberg about the current situation.
That is one option, is we could go to the courts and seek an injunction, which we may do. I mean, we're obviously very, very disappointed with the actions of the QP leadership team. They're violating the law, and it's negatively impacting hundreds of thousands of our customers right now.
Let's talk to Danny Lee about this. Danny, now what?
Well, significantly, the union and Air Canada did hold talks for the first time on Monday since the strike started. And there seems to be a willingness just to see where each side is at. Clearly, for the CEO, Michael Russo of Air Canada, is raising the stakes by waiving this threat of trying to maybe get an injunction to get the 10,000 cabin crew back, back operating their flights, because this is seriously damaging for Air Canada. Over 100,000 passengers a day are being impacted. We also heard 24 hours ago from Air Canada that they would be suspending its guidance for the third quarter and the full year because they just do not have the visibility given the potential costs that this strike has. So there are limited options, frankly, for Air Canada. And given the union has defied the country's Labour Board in getting back to work, there is clearly a willingness that the airline would want to see some kind of resolution, but things still remain up in the air.
Still up in the air then, appropriately enough, Danny. So it's unclear where this heads next. This coming at a very busy time of year for many airlines, and Air Canada falls into that camp. Underscore for us just the level of disruption that we're seeing as a result of this.
Well, Air Canada is one of the two major airlines in that country, and so by crippling almost half the flights that the capacity that is offered, it is pretty damaging for not just Air Canada but for the country's economy as a whole, and that's something that does cause concern for the government in Ottawa. Clearly, there are benefits for other airlines out there who will be cashing in, because when you try to look internationally for seats for flights into Canada, most airlines are full. You have to take maybe 1 or 2 or 3 stops to try and get into Canada at the moment. So there's a headache for travelers out there, wide range of disruption. And yes, we just don't see when there will be a resolution. And clearly for Air Canada to try and restart operations, that could take many, many days with the crews unknowingly when they will get back to work.
Yep. Danny, it's interesting because a lot of people obviously have been trying to go to Canada recently as a result of changes maybe in perceptions of what it's like to take a holiday in the United States. Anna and I can debate this at length, I suspect. Danny Lee, thank you very much indeed, Danny, on the Air Canada story. Let's look to what we are going to be watching for the rest of the day and the rest of the week. Today, a little light on catalysts, but there are a few out there that Valerie Teitel has her eye on.
A few of them, one of them being that the back end of the bond market has not had a streak of a good few days. I mean, we're approaching 5% yields again on the third year. I mean, it could perhaps, right? That is the big argument for how far this equity market rally could go. A back end blow up in the bond market could definitely be something that could spook the equity market. But it's not just been isolated to the U.S. We're also seeing European government bonds shoot to multi-decade highs. On Friday, it was French and German yields. And then yesterday, gilt yields were trading at year-to-date highs in the 30-year yield. And there was almost hardly any catalyst for the weakness in yesterday's session, which was very surprising. Yes, you can talk about, okay, the data has been better than expected. Maybe that's tempting GDP estimates to be revised higher, inflation to be revised higher off the back of that. But this is really complicating things for the chancellor, because we know that not only better growth projections are good for her, nice for her, but if we get higher yields off the back of that, that just basically undoes it all in one swoop.
It's all right. We can raise property taxes. It's going to be fun.
Yeah, that seems to be where the conversation is heading. Government ministers on various airwaves this morning doing their best to not answer any questions about the speculation in various papers about whether there'll be a change in property taxes. So the gilt yield story sort of ties in with the long end story that we're seeing in lots of different geographies. And we get UK CPI tomorrow, Valerie. I suppose there's a linking thought there.
Well, one of the biggest data prints for Europe this week is UK CPI dropping tomorrow at 7 a.m. Now, the narrative has been one of economic resilience, or better than expected economic data, frankly, from yesterday. Yep. This can be all undone if we see a hotter than expected CPI print tomorrow. We are expected to see services CPI tick up just 0.1% on a year-on-year basis. This comes as the market has really pushed out the likelihood of any Bank of England cuts this year. We're now pricing none.
Services inflation is running at 4.8%. That's what the survey is. These are punchy numbers from the UK.
Punchy numbers, and maybe the Bank of England has already said their response to that, as in that hawkish meeting that they had 2 weeks ago, that they're going to be on hold. But yeah, the rate expectations for rate reductions have been pushed out, but on the backside of that, long end yields are still rising.
Meanwhile, we get closer to the US session, where they'll probably care less about gilt yields and what's going on in the UK dynamics, but a lot about the tech sector today, because a lot of headlines there, Val.
A lot about the tech sector, and a lot of thinking and thoughts. I know Guy has some to share about whether you're more bullish on the AI story because the US government is getting involved, saying that they're going to take the money that they've been given in the CHIPS Act, which is around $11 billion, they want to convert that into an equity stake.
Okay. Not everybody's convinced that this is a good idea. We'll see whether the market responds positively or negatively. So far, positively. We'll see how long that lasts.
Valerie, thank you very much. Bloomberg's Valerie Teitel with a look at some of the macro drivers and a little bit of the tech story as well. That is it for the opening trade. The Pulse is up next. This is Bloomberg.